Sorry about that, guys. Apparently there's no sound. I don't know if I should do all this over again or not. Anyway, like I said, bottom line, some bit rough numbers out of the net loan impairment expenses and the doubtful debts out of Capitec. So let's watch it closely today. Let's see what's going on here. Jan Strassen is expected to retire at the end of the year, but I think markets were kind of expecting that anyway. So no big surprises there. All right, market data out today. We have got French business confidence out in just a minute, Italian consumer confidence. We've got local consumer confidence. And then later in the States, we've got NBA mortgage apps, durable goods, new home sales, and crude oil inventories. So there's actually a few things to keep an eye on today. All right, let's jump into the maps. All right, first one I wanted to show is the S&P 500. The reason why I wanted to show this is strictly because, over the last few sessions, sorry, let me just get this a little bit. There we go. Over the last few sessions, you can see, obviously, we've pulled back off the highs in the S&P, and we've kind of been in this slightly, I shouldn't say slightly, this upward sloping grind, and this little range that we've been in. But what's interesting is that you've really got a couple bearish things that have kind of been happening while the S&P was making highs. We weren't able to see the number of 200-day moving averages and things like that that were able to be broken to the upside. Those kind of hit a wall. So there has been a bit of a divergence in the stock market and waving some slightly cautionary signals. So I think it's really important to note, obviously this being the month of October, I wouldn't be surprised to see a pullback to the bottom end of this sideways range that we've been in. So, there hasn't been one significant down day in this bunch. It's just kind of been a few consecutive down days after the Fed taper announcement, no taper announcement. But just watch this closely. I mean, I think we could, the market could sneak in a correction on us very quickly. And when people are starting to believe that it can't happen, that's usually when it does. I just wanted to show the local market here quickly, just so you can see over the last couple of sessions, we're sort of flagging here. Obviously I did this before we opened this morning, and we're breaking out the bottom side of this flag at the moment. Actually, in fact, we're already back up above support here. So we're going to look at about, call it 97.30. It's the bottom end of support on this little flag. I think if we can hold here today, we will probably push higher, back above 40,000. So we'll just have to keep an eye on that. If we're not able to hold that support level, I would expect us to come down here and test really where we broke out from, and fill the gap here at around 92.5, 39,250. All right, let's look at mutual. I'm going to go to a year chart on mutual. Why I wanted to show this is, we talked about this, I think, the other day as well, and how this is looking a little bit head and shoulder-ish, but we managed to pop up above this 30 level, which we kind of thought was breaking us out. This thing's still looking very head and shoulders. It really hasn't done, sorry about that, one thing significant above this 30 level. And I think what we can watch here is for us to see if we can possibly break below support on the trend line. I would definitely not short this yet. This definitely is by no means a completed head and shoulder, but if we drop below support on the trend line, I really think that we could sell this thing for at least a couple bucks to the downside. So watch that closely. The support on the trend line is really going to come in around 29.50. So and it'll be higher and higher the days go on here. So all right, let's look at Tiger Brands. Tiger Brands, the reason why I wanted to show this is simply, we've obviously had this big rally up, probably bigger than most of the other stocks of the last few sessions, of the last week and a half. But we've really been failing. If you look here, I mean, you can see obviously on the wicks, but even on the closes, our best close is right here, right at 300. We haven't had one other of these days. We had 1, 2, 3, 4, 5, 6, 7, 8 days or we tested right around 300, and we couldn't get a close above 300. What's also interesting is that it's the 200-day moving average as well. So to me, it looks like we're kind of starting to put in a little bit of a fail here around 300 on Tiger Brands. If we get a move, I would say below, especially below what the close on this range would be at 294, I think you can probably really sell it. All right. Let's look at bulletins. I know we've been talking about this chart the last few days, but the two charts between here and London are just so convincing, so convincing. They're so interesting. They're such good setups that I think they're worth watching. Bulletins, I would expect to open maybe lower than this 295 level this morning. We closed it right around 293 in London in yesterday's session while we were closed. So I would really expect, if we can hold below this 295 for us to at least fill the gap here around 290, maybe even more. And when you look at the London chart, it doesn't look so good. This is definitely looking very head and shoulder-ish here. Quite a classic setup, and I really, in my mind, and the way I'd like to look at this, I think we've broken down already, and we've dropped support there on the neckline. So, we could really get some confirmation if you drop 1850, strictly because there's nothing in a horizontal sense that's below there to give you support. But I think we've already kind of broken down. I'd like to see a break below 1850 to really give confirmation and to hit down on it. All right, and the last one I'm going to show is going to be J.P. Morgan out the U.S. also making a head and shoulder. So today's a bit of a head and shoulder day for the presentation here, but you can see there obviously quite clearly making a nice little head and shoulders. $50 right on the money is really the level that we're going to look for. You can see how perfectly we've touched 50, kind of the top end here before we broke out. We came down and tested it back in June, came down and tested it in August, back down here, and it's right at the 200-day moving average as well. So I think this is quite a convincing setup. I wouldn't be surprised to see us break down from here. There's a lot of negative news around J.P. Morgan, around some of the U.S. banks. I think people are expecting U.S. earnings season maybe not to be so stellar in the upcoming season. And that's it for today, guys. Thanks a lot.